Ladies and gentlemen, I think we'll begin the proceedings. Thank you very much for coming today. My name is Paul Wright. I'm honored to be the director of CITRIS and introducing our second research exchange. We have the web viewers at Davis, Santa Cruz, and Merced also watching this. This week we're in this smaller room, 250. I apologize for the density. Because the Synthetic Biology Symposium is going on upstairs. It's a 3-day event. As I was walking in this morning, I saw our distinguished colleague, Jay Kiesling, speaking. And this Friday, our I4Energy events begin. And so do come to the Friday meeting if you possibly can. What I'd like to do is quickly move into the introduction of our distinguished guest, Dr. Arathi Prabhakar, who I met for the very first time back in the 1990s, very briefly when she was the director of NIST, the National Institute of Science and Technology. She was the director of that very important program. And to show a certain amount of academic respect, she has a PhD in applied physics from the California Institute of Technology. And I think anybody that knows that if you're admitted to the California Institute of Technology and you do applied physics, there's a very large brain in her head. And so give her respect as the thing goes on. It was the appointment as the director of NIST, incidentally, is a presidential appointment by President Clinton at the time. During the mid-2000s, she worked for U.S. Venture Partners, an early-stage venture capital firm. And her current position is to be the chair for the U.S. Department of Energy, as led by Dr. Chu, as you know, in the Efficiency and Renewables Advisory Committee. So it's a great honor for us today. Arathi, you can see looking around the audience that many of our most distinguished colleagues have come to your talk, leading with Vice Chancellor for Research, Dr. Graham Fleming is here. Graham, thank you for coming. I see previous deans in the room. I always embarrass Dave when he's here, so I won't keep it long. And Harrison Fraker over there. And some of our most distinguished colleagues, Seth Sanders, Carlos Sacan, Kostas Panos, Eli Yablanovich, that runs the E3S Center, you know, the Science and Technology Center. So this is why we don't have drinks in the room. Vice Associate Dean Sujay King. And many, many students, many of which I know, many of which I don't. Who else is some of our distinguished postdocs like Igor Paprotny in the front. So I'd like to ask for a warm welcome, showing a round of applause for Dr. Prabhakar. And please come and talk to us about the energy future.
Thanks, Paul. Thank you so much, Paul. It's so great to be at Berkeley. Every time I come, I really enjoy my interactions here. And, you know, I'd love to just find out, at least for the people who are physically in the same room, first of all, I sort of know about many of the faculty members, but for the students, who's working on energy issues? Everyone. Who in the room is working on energy? Who's not working on energy right now? Sort of thinking about it, or so. Why'd you come if you're not interested in energy? I'm just curious. Is it a topic of interest even if you're not working on it right now? We're not going to fess up. Okay. Well, what I want to do today is, this is essentially the story. I want to talk about this major new sector that's emerging in clean energy, take a little bit of time and show you where we are with this transformation of our energy systems. And then I want to talk a little bit about the good news and the bad news for the United States in particular. The good news, in my view, is that we are really leading and driving in terms of the new technologies. I don't have to tell you all this because you all are actively engaged every day in creating some of those new options and innovations that I think are going to be so key for making this full transformation happen. That's the good news. You guys are the good news, and we have to make sure we keep that going. In my view, a real concern is that we are lagging in deployment, and I want to talk a little bit about what some of the implications of that problem are. It's a really unusual situation because not for, I think, many generations in this country have we seen the emergence of a whole new major industrial sector that really started as a global phenomenon, as this one is doing. And I'll show you some data about where things are really bubbling. If you think back about automobiles and aircraft and semiconductors and computing and consumer electronics and IT, and we are very used to the great luxury of having those innovations, starting those industries here, building them to serve our massive domestic markets, and then as they mature, they globalize and we deal with how that affects our industries, but we're doing it from a phenomenal base of strength because those industries really started and got a firm foundation here. Very different dynamic in clean energy, and I think it poses some new challenges for how we think about how we tackle those problems. So, and then really what I want to do at the end is share my thoughts, a few things at least, about some of the factors that would help us to participate fully in this transformation that's going on. I very much want to solicit your ideas. I think it's key, obviously, for the United States because it is a major economic sector. If we do participate, it can translate to jobs and the kind of economic growth that I think we all deeply value. On the other hand, it's also important, I think, for the globe to be able to solve its problems, both in terms of the climate challenge and the overall energy challenge. I don't think it's going to get done without the leadership of the United States, given the size of our economy and our long history of innovation and bringing innovation to market. So those are the topics. Let's start by taking a look at what's happening with global investment in clean energy. The number of dollars that were invested in new energy systems in 2010 is $1.2 trillion, and I had a good time writing all those zeros out. I thought it was sort of nice to talk about trillions and not be complaining about the national debt. So it's a very large number, and this is, I think this is a number that's not just a 2010 number, sort of $1 trillion a year that's spent globally in building new energy systems of all different types. So how much of that now is clean energy? It's now, after fairly rapid growth that I'll show you in a second, it's now grown to be about 20% of the total investments that's happening. It's $250 billion, massive capital. This is data from Bloomberg New Energy Finance, and what they put into, everyone's got a slightly different definition. Their definition of clean energy includes all of these things: biomass, geothermal, wind, solar, biofuels, energy efficiency, and you'll see in a minute that it's really dominated by wind and solar. But this, again, depending on whether you're an optimist or a pessimist, this is the fastest growing sector within energy. It's saying that there's $250 billion of infrastructure investment that happened last year that's for systems that will last for many, many decades, and that's all very, very encouraging. Alternatively, there's 80% of this pie that is still being spent on traditional energy systems, many of which really aren't going to meet our long-term future needs. And so good news and bad news. So this 20% slice of the pie has come about actually quite rapidly. If you look at the scale up over the last 6 or so years, you can see by different energy areas where that investment has happened. And you can see that wind and solar are the two core capabilities that really have gotten to a point of maturity where massive deployment capital has now started flowing to them. And then, these other numbers, which look small on this chart, still represent very substantial, many, many billions of dollars of investment, and in some sense represent the emergence of the next waves behind wind and solar, which I think will also be very, very key. That was energy overall. If you just look at the sector that's about generating electrical capacity, this is actually a much rosier situation for clean energy, with 46% now of the total new electrical generation capacity being for clean energy. So a bigger shift on the electrical side. Again, that's the good news. The bad news is what that really, the other way of saying that is that the transportation side of the equation really has not changed very significantly at all. So those are tectonic shifts in capital. Hundreds of billions of dollars. So I think it's worth stepping back for a minute and saying, what are the fundamental drivers? Capital doesn't move in those quantities very rapidly for no good reason. So what are the fundamental drivers? I believe that the core driver really is energy security, and that's what this picture says to me. Many people, I think, have seen this. This is stitched together satellite photography of the Earth at night. And obviously it shows where population is. Much more interestingly, it shows where economic activity is, where there's been a rising standard of living, where people have been able to create a better life for their kids because they're living life to their full potential. And that cheap, reliable access to energy is such a crucial ingredient in the growth of these societies and in the blossoming of these societies, that anyone who doesn't have that kind of cheap, reliable access to energy is working very hard to get it. And if you have it, as we're fortunate to have it here, you're working very hard to make sure that continues to be part of your future. So that's what energy security looks like. Energy insecurity is also very much a factor in our lives, and it looks like wars in remote places. It looks like how we now think about the Arab Spring, where our hope about a new generation rising is tempered by our fears about what that means for energy security. It means if you are in Europe that Putin can turn the crank and shut down your gas supply, which has happened. And it means that if you are Japan and you were planning on relying on nuclear power for meeting your clean energy needs for the future, that world changed very abruptly and very dramatically. It also means that when we consume energy, it has, in some cases, devastating side effects. We've known about the pollution impact from things like coal mining, but also coal burning for many, many years. And of course, now we're dealing with the threats of global climate change that entails risks that are so complex that I don't think we've really fully grasped what they entail. And all of these are the challenges of energy. We want cheap, reliable access to energy. We know it has costs, and we know that these pressures are driving us. So that's the big picture. Let's just take a minute and zoom in on what's happening in the United States. Who has seen this chart? Everyone sort of pretty much knows this chart. So this is energy sources in the United States, showing how energy is used for electrical generation and then in different fixed environments, and then also for transportation, which is almost all petroleum. And, you know, I think anyone who's familiar with this is familiar with the fact that technologies like the renewables we were talking about are just barely beginning to show up in terms of deployed capacity that we have. But, you know, if you just sort of step back and say, well, where are we? In 2009, and we're still pretty much in the same place, we were at about 83% of our primary sources being from fossil fuels. We still had very significant losses. You know, about 2/3 of the primary energy is lost in electrical generation. In transportation, it's even worse. The amount of energy that actually goes to moving you forward in your vehicle is a very small fraction of the energy in the petroleum that went into your tank. And then all the way down the line, it nets out to more than half of that primary energy coming in that's lost. So huge issues in sources and huge opportunities as well in terms of savings on the efficiency side. So how does that translate? How do these sort of big pressures translate in the U.S. system? I think, you know, many of us who work on these issues look at it and say, well, it's really obvious. We need to become energy independent. We need to deal with climate change. We have these great opportunities around energy efficiency. Why doesn't it just happen? Well, lots of reasons. Not all of the directions, not all the forces are aligned in the same direction. And this is, I think, a fact that underlies a lot of the political chaos around this field. So if you start with energy independence, which is a major factor in energy security, that argues for reducing our dependence on petroleum, where over half of our energy is imported. But it's also a reason that advocates for coal say, well, you know, we got plenty of coal. This is a good thing. It's domestic and it's fine. Natural gas, we now have far greater reserves than we had thought earlier because of new technologies that open those things up. And of course, all the renewables and nuclear as well can contribute in a significant way to energy independence. But if you look at greenhouse gas, of course, you get a little bit different picture. Petroleum still is a major contributor, and so at least here the forces line up. Coal is this, coal and petroleum really are the biggest components of our carbon footprint in the United States, and so clearly dealing with coal and carbon is central if we're going to solve our greenhouse gas contribution problems. Natural gas is a little bit of a mixed bag because, of course, it's so much better than coal that it seems like a very good move. On the other hand, it still has a sizable footprint compared to where we think we really need to get to. And so, some have positioned it, I think many people have thought of it as an interim solution before we can really scale carbon-free sources. But remember that interim in these industries is something that spans many, many decades. So I think there's a lot of pushing and shoving around those kinds of issues. And then again, these renewables and carbon-free sources are very, very small, but again, are very key in the solution. So a lot of some alignment, but actually still a lot of conflict in what we should do next about achieving these various goals. The one thing that I think everyone agrees on is that it's good economically, and it's good from an energy point of view, and it's good from an environmental point of view to reduce our waste. And even though that's really obvious, it's fairly slow going, and I think there's still quite a lot of that so-called low-hanging fruit that's still waiting to be picked, and I think that still, in my mind, represents quite significant opportunity. So, those are some of the pushing and shoving issues that go on in terms of the U.S. context. But again, when you step back, in my view, the fundamental drivers pushing the clean energy sector are so basic and so global that over the long haul, I think they will create the transformation that we're talking about from the energy systems we've had to the energy systems of the future. Technology is obviously a very, very key part of getting there. Without innovation, we simply wouldn't be able to solve these problems. And I'm not going to spend a lot of time in this section because it's definitely Coals to Newcastle. You all are out doing this. But let me just make a couple of points. One is that technologies like solar and wind, where a number of the innovations that underlie the things we're deploying today really started quite a long time ago. Those technologies have been coming down aggressive cost curves. This is a projection looking out from here to the future as to where photovoltaics technology can get. And according to this chart, at least, we're in a sort of a regime right now of 20 to 26 cents per kilowatt hour. These are based, as you can imagine, the models that go behind this are very dependent on the assumptions that are made, but this is looking at different regions in the United States and looking at the cost of capital and different technologies that are available today. And it's, it's still higher than this range that they've projected as electricity, the benchmark, which is what you buy off the grid. But it's on a quite attractive curve, and I think foreseeably within a few years gets to the point where much of the electricity market would actually find it cheaper to go with a photovoltaic solution. And I think that's a pretty encouraging story. I think it's a very similar story for wind. The investments that have been made, the deployments that have started, of course, have been made largely because of a market that's subsidized in one way or another. We're at a huge tipping point once these technologies are able to thrive on their own without those kinds of subsidies, and I think that's very much within sight. By the way, I thought I would just benchmark and see if this was a crazy range, and since this is for residential, I went and looked at my electrical bill, and it turns out, to my embarrassment, the first few days of a month, that's my electric rate that I'm paying, and then the next few days it's like that, and then towards the end of the month it gets like that, and by the end of the month it doesn't even fit on this chart. So my marginal cost of electricity, I'm not proud of this, is very, very high, and so actually there are markets where solar is actually quite competitive already. So good news, good progress, and a long path ahead that still needs to be driven. There's a lot of technology in getting down that curve, and I think that's really going to be key. Wind and solar are not the whole story. We hope that they're the beginning of a much longer, deeper trend, and the number of technologies that are bubbling and brewing right now on all fronts are really very exciting to see. Some of these things are going to work out in scale. Some of these things are not going to work out in scale. But unless we create those options, we don't have those opportunities in the future. So this is something that, again, in the U.S., I think we are this is the best place on the planet to do this. It's not the only one, but it is the best place on the planet right now, and this is a huge competitive strength that we have. So this is good, and we have to keep it going. Let's shift gears and talk about how you get from this bubbling pot of great ideas through commercialization to scale impact. Because really what we want at the end of the day is to see that energy flow diagram change, right? I mean, that's the scale of impact that we're really talking about. So let me start with some data that will just show you where that $250 billion, it's $243 billion that was invested in 2010. Let me show you the different kinds of capital, first of all, that goes into that number. This is a breakout into venture capital and private equity. And please note, for those of you who follow the venture industry, venture capital is actually a small fraction even of this piece. So it's actually very, very small on this chart. Public markets, asset finance is the kind of capital that deploys massive projects, and that's, of course, where the big capital has to go. Small distributed capacity is the finance that lies behind smaller scale projects like rooftop solar, and you'll see in a minute that what's really driving that last category is German feed-in tariffs and the very broad deployment there of rooftop solar. So I'm going to come back and talk a little bit about these different kinds of capital in just a minute. The point I want to make right now is simply that this is a system, and these elements can't really thrive by themselves. So for example, right now I think we've had a very healthy push on the venture capital side over the last decade or so in clean tech. That's very good news. That won't continue, and those opportunities won't thrive unless the other pieces of the puzzle are in place, unless the asset finance and the other capital is in place to take those technology push ideas out of startup companies and turn them into the massive scale opportunities down the road. This won't happen unless there's innovation on this end. And asset finance, that capital will not flow unless we've got end markets and proven technologies. And when that happens, that's when capital starts coming into this category. So those are some of the ways that there's interplay among these categories, but no one of them can thrive in isolation. And balance water will find its own level. The capital will flow to places where the balance strikes in a way that works. And I think we're in the process of seeing that go on right now. Let's take a different cut at that $250 billion. This is looking at the trends over the last few years in different geographies. And if you look at it, you'll see that Europe, through a very severe financial downturn in 2008, 2009, continued its fairly significant investment in the clean energy sector and continued to grow it. China turned on with a vengeance, with huge growth in capital and deployment. And the Americas piece is not all, but is a big component of that is U.S. And you can see that we took a hit during the downturn and have sort of come back, but it's bouncing along. We're not really driving this area if you look in a trend line over a few years. And then if you look at 2010, but broken out by country, again, you'll see that we're not really driving deployment. A simple way to think about this chart is that the green and the sort of yellow color, public markets, venture capital, private equity, those represent more a sense of technology push, but it's really these blue bars, the light and the dark blue bars, asset finance and this small distributed capacity. That really represents deployment. That's taking this stuff and getting it out in the world and generating energy to be used. That's really happening. Please, go right ahead.
Can you give an example of asset finance?
Yes. It's the finance behind BrightSource deploying a major solar installation in the desert. It's the finance behind a factory to scale biofuels.
So is this put together by banks?
Yeah, and that's exactly what I'm going to talk about, is what the details of what that looks like, because it's very different than the kind of finance I think we deal with on the other end of the spectrum. So again, I think to me this chart really quantifies the sense that I think we all share that we have this huge technology lead in the United States. We're not deploying. We don't have those end markets, and that really crystallized it for me. So now let me come back and talk about precisely these issues about the different kinds of capital. There's a lot of conversation about the term valley of death. I think has been used to the point that it's lost its meaning. But I think we've all seen, especially with these capital-intensive technologies, that there are many places where it seems that there's a bridge too far, that it's very hard to get the capital to go the next step. So what I wanted to do was just sort of walk through, just take two pieces of this, venture capital, which is the extreme end of this spectrum, and then asset finance, and just talk a little bit about how different these two types of finance really are. The business model, first of all, is very different. A venture firm that raises a fund is targeting at least a 30% rate of return. Target, please note, sometimes it's much better and sometimes it's a lot worse. There's a lot of risk in that number, but it's a very high target. A project that's being considered from an asset finance point of view is looking for about a 6% return, but no risk. Boom, that 6% has to be there absolutely every single time. The way that that return is generated is radically different. Here, of course, venture capitalists are buying shares in an early company and working hard and hoping that in some number of years down the road those shares will be enormously valuable and they'll sell them in an IPO or in an acquisition. The returns to project finance come from something radically different. They come from the cash flow from the projects. And that means you got to have cash flow from the project. Sometimes these transactions happen before there's any cash flow whatsoever. So again, very, very different business model in terms of where the return comes from. And then on the downside, what protects you? Well, in the venture model, there's actually not that much that protects you. And often you lose your shirt in individual investments. On this side, asset finance, it's backed by the assets, and so the downside is quite protected. And all of that leads to a radically different way of thinking about risk because, as I think everyone here knows, in the venture model, a winning investment is going to return 10x, 20x, 50x, 100x. It's going to be great. A loser... The great thing about venture capital is you can only lose 1x. You can't lose any more than 1x. And that's what makes the model work because, only a small percentage of the portfolio is going to deliver those huge returns. There'll be a lot of in-betweens and, half or sometimes more of the companies will lose all the capital or a lot of the capital. And it doesn't matter as long as you get these big wins. And that's what drives it. Very high risk model, but of course very high returns when it does work. Asset finance is again, radically different. The winner generates that 6% from cash flow, and a loser is actually not allowed. It's not, you can't have one that doesn't deliver the 6%. And those are the fundamental structural differences that really drive the kind of risk that these two kinds of capital can take. And again, I'm taking just two extreme ends of the spectrum. But for this category, for asset finance, what that means is that unless there's an end market that will buy the energy that's going to be produced at a price that offers a margin to the producer, and unless the technology to generate that energy is proven, and that means it doesn't mean it works in a lab, it doesn't mean it works in a pilot, it means a statistical number of those systems, of the turbines or whatever, have been deployed and work, that they've been going for years, so you know that they're going to last for 20 years. It means there is no risk left whatsoever. So, I think when you start looking at that, if you stand back and you say, how do we get more private capital in the U.S. system? In other countries, I think clearly there's a lot more government-driven investment, but in our private capital system, how do we get more private capital focused on deploying energy technologies? It's going to be about making sure those end markets are there and making sure that we drive all the risk out of the technologies. And those are the kinds of gaps I think that new technologies struggle with. Okay, so let me take just a minute on policy and then we'll stop so we can have some conversation. This is the other major component in this picture. For every major economic sector, but most particularly for these kinds of sectors of the economy that involve deep technical infrastructure, policy is just such an important piece of how we get over these initial barriers and align all the work that we do so that we actually get scale deployment. And in fact, we have quite a number of federal and state programs and policies that are integral to shaping the landscape for these technologies. We wouldn't have gotten as far as we have without the work that's been done. This is just a little bit of a map to try to bring some organization to thinking about all the different components. What I've done on the bottom is talked about things that affect energy supply, where we're looking for sustainability and domestic sources, and then things that focus on the energy demand side. Usually the driver there is efficiency. A lot of where I think in the R&D business, a lot of the role that we see for the government is helping to create technology options, but there's also a market catalyst role, and there are different tools to deal with these. So R&D, of course, across the board, but also in the case of energy supply, demonstrations, loan guarantees to build capacity. Yes?
Carbon tax on there.
Well, I haven't found one in the U.S. Is there one in the U.S.?
No, but there are, in effect, there are in other countries.
There absolutely are. So I put cap and trade because at least we have regional cap and trade. But yeah, that's another one. We haven't chosen to do that, and we haven't chosen to do cap and trade at the federal level. But yes, absolutely, Dave. I mean, I think that's one that should be considered. The main point I want to make is policy is in this business. It's shaping this field. But all of these components have been tackled in a fairly ad hoc way. People who think about CAFE standards do not think about this whole system and how it's all going to work together. People who work on R&D, unfortunately, don't really think about how all the deployment side is going to work. And I think that there is some very important work that needs to be done to look at this policy framework as an integrated set of activities. But that's my theoretical desire. Here's what's actually happening. As you know, a lot of back and forth. A couple of years ago with stimulus funding, a big surge of capital into energy, about $30 billion that went through the Department of Energy from the stimulus program. That stood up ARPA-E, which is, I think, a tremendous success story in its early years here. That was only about $400 million of that $30 billion, but an important piece. Loan guarantees got started. Energy efficiency and renewables got a big boost in funding. That was the good news. Now, what's happened since stimulus is all pretty much a whole lot of nothing. As you know, we've had this sort of stalemate where we haven't had climate legislation, but on the other hand, the EPA's been told by the Supreme Court that they have to deal with greenhouse gases, and EPA is getting cut back, so it's sort of a mess there. We've got very interesting ideas about moving our national policies forward, but these are pretty much in limbo. There's a little bit of progress, but those policy options are not really moving forward. And not only are we not moving forward on some of the things that we need to do, we seem to be trying to move backwards on the things that do work, which are the R&D investments. So not a very good picture at the federal level. I tried to update this chart from the last time I talked, and there wasn't actually much to update, unfortunately. The really good news is what's going on here in the state, and I think this is a case where we are showing a great deal of leadership. Defeating Prop 23 is just a recent example. So given all of that, what do we do now? The first thing we should do is not slow down on the stuff that's working, and that, again, in my view, is the R&D, and it's driving the cost curve on the technologies that have started making some progress. I think we have some other things that need to happen as well, and one is on the policy side, aligning this vast number of policy components in a way that would really unleash private capital. And we do, many of us, self-included, spend a lot of time saying, Washington's got to get its act together, and they do. That's not the only place that needs to get its act together, because I think in the private sector we have a lot of muscle building that needs to happen in terms of our financial capabilities to deal with the kinds of risks that these technologies represent, and building an industry out of this, in my view, still fairly fragmented set of companies in the clean energy sector. So I think there's a lot of very good constructive work that can be done that could help us seize this opportunity in a great way. What are some of the things we can do in this room? First of all, you know, if you're working on inventing solutions, if you are working on figuring out the next great problem to tackle in energy, if you're commercializing it, if you're thinking about scaling or pushing on scaling it, keep doing that. That's really what's going to make this work. I would also suggest that if you're doing those things, also take a little bit of time to the extent you can and pay attention to what's happening with the bigger system in terms of the overall economic activity in energy and the policy activities, because I think until we get those aligned, your efforts really can't have the scale impact that we want. So figure out what you really support. I've told you about a bunch of things I support, but you know, you'll form your own opinion. And when you do, share it with people who can do something about it. There are groups that are out there lobbying and getting information, and you know, go take a little time and engage in that. I think it'll be very worthwhile for the whole community and for your work as well. So at the end of the day, this is about choices. We've made energy choices for many, many, many decades, and while from one year to the next it doesn't feel like much is changing, we know that our energy mix has changed dramatically over many generations as new opportunities in energy have arisen and as new industries have developed that have different needs. It's a long history of change, and we're in a time when we can be part of driving that next generation of change for our energy system. So I think it's a very exciting opportunity, and I'm really happy to have the chance to talk with you about it. Thanks, and I'd love to hear your questions and comments.
That was a great talk. Let me just kick off the questions by asking, you know, with the sticky economy we're in right now, the asset columns, you know, the blue and the yellow ones for 2009, 2010, do you have any crystal ball info on what the 2011 column will look like in the asset group?
You know, so much of those global numbers is being driven by Chinese investment, which is not
Yes.
private capital the way
Yeah.
I think we think about it.
Okay.
I think the German piece is going down because the feed-in tariffs have had a great impact at a great price, at great social cost, but I think they've had quite a lot of impact. And now I think that deployment is slowing as it matures a little bit. And the U.S., I don't have that crystal ball.
Okay.
That's a hard question.
Thanks. So we'll get questions from the audience. I'm going to get people to use the microphone so that it's recorded for our various other groups around the state. I think Carlo had his.
Yeah, when you took your initial poll to find out who is working on energy and who's not, you seemed somewhat surprised that not as many students here as you might have hoped are actually working on energy.
No, I sort of expected a mix. I thought it. Actually, I think one of the exciting things is people that haven't worked on energy that think it might be interesting and important and are getting drawn to it.
Well, that sort of leads to my question. When we're really looking at what it takes to get ourselves a clean energy future, what fraction of that is really a technological problem and what fraction is a political problem?
These are challenges of a scope and scale that they simply don't get solved by any one of those pieces. Technology is absolutely necessary, and by itself it is not sufficient. And I would add to policy, the third leg of that is the industrial and financial piece of it. Because unlike, I think, many of the industries that, before I focused on energy, I had a lot of history with the semiconductor industry. Others here have worked with IT industries. The way you go from innovation to commercialization to scale is different, I think, in energy because of the infrastructure nature of this business and the capital intensity. And so I think you really need all of those elements in alignment even more than we did in some of these other sectors. But, yeah, I'm more optimistic about the technology than the politics at the moment. That's certainly true.
Question here in the middle.
Thank you. Avi Ringer. This is a political question, so it follows well on that. You talked a lot about finance, which I think is clearly an important barrier, especially when you're talking about initial deployments of technology. And you mentioned that there was some movement on some public policies, the Clean Energy Deployment Administration hoping to leverage some public capital for huge investments from the private sector. Can you talk a little bit more about the movement there?
Yeah, it's something I'm personally very interested in. The loan guarantee program that was funded through stimulus funding did provide a burst of support for financings in clean energy. But that's a limited time period. We're sort of finishing executing on that set of activities. And the Clean Energy Deployment Administration, CEDA, I think is, in my mind, it is the best crafted approach to turning that into a longer-term program. And what I particularly like about the way that piece of legislation has been crafted is that it builds in the kind of flexibility that I think you really need to deal with the complexity of issues in different technology sectors, et cetera. I think it's been well thought through. It's been passed by the Senate Energy Committee in the last Congress and again by this Congress. But, I don't know when. I'm hoping the day will come when it can get on the floor and turned into legislation. But there's not a lot of that going on in any area right now. Yeah, but thinking back about what has worked from my time in Washington, legislation sort of brews, and if it's ready to go, you don't know when the vehicle's going to come. And when that vehicle comes, if your piece of legislation is ready and you can get it on there, and there's enough support, and I think CEDA is sort of positioning itself so that it can. The biggest problem is the usual one, which is where does the money come from? But I think that there's remarkably good bipartisan support behind it because people see it as key to building the industry and the jobs that go with it. So that's the good news.
Rafi, thanks. Professor Kalla has the microphone.
Hi, David.
Wonderful talk. So the most sobering chart on there, I think, was the one that showed the investment and what a tiny fraction of that went into energy efficiency. And I would hazard that the 58% of waste that you called out, of course, that's only a fraction of it because that doesn't account for all of the additional waste, of the miles driven that shouldn't have been,
That's right.
all of that stuff in buildings and industry. So it's probably a number much more like 85%, right?
Yeah.
So one argument would be that we're investing on the supply side because that's where revenue concentrates more easily. The demand side is more diffuse. How do we change that? Or, is it that we need to break this more energy means more quality of life? How do we get quality without the energy spend?
Yeah, huge opportunity. You're right, it's even bigger than the 58%. The one little caution about the data is that I use this information from Bloomberg New Energy Finance, and I think they do a great job of sucking up all the information about big projects that get financed. Then they went and figured out rooftop solar in Germany, but they don't know when you go buy LED lights because it's just an investment at too fragmented a level. So I can. Oh, they for sure don't know about that, right? But so I have reason to be somewhat more optimistic than that little tiny piece on the bar chart. But your core point is absolutely right. And of course, the problem with energy efficiency, it seems like it should be easy because it's economically such a good outcome. And everyone's known that for a long time. But as in the real world, the hump to get over that initial investment is huge. I had a conversation with the fellow who runs, he's the VP of Energy for Dow. I asked him, how big is your energy bill? And he said, well, tell me what the price of oil is, and I'll tell you what my energy bill is. And I said, well, just in the last couple of years. And he said, well, I had 1 year where it was $15 billion and one where it was $30 billion. So he has a big bill and, 100% volatility in 1 year. So he's got a problem.
It's like LPG.
Exactly. But even given that, in a very energy-intensive sector, he said, I've got a raft of, and they've done a lot of work, but he says I've got a raft of additional energy efficiency projects that I can't get capital for because the company's worried about using its balance sheet to do that in this environment, even though they know it's going to pay back quite quickly, with ROI less than a year. So I continue to be astounded at how hard it is to get over that hump, and I think there are things that can be done about that too. Big fat target.
So along that line, maybe one strategy is to look at the major agents of change that could impact investing more, say, in the efficiency area. And I wonder if the government has looked at trying to get the utilities and the banks together and get some more creative financing, because they are the agents that touch this distributed, the utilities are the agents that touch this distribution. And I know California has had some success in changing the rate structure and so on, but I think there's a lot more financial and policy innovation potential in that area to drive some of the things that David mentioned.
I think that's a great idea. And there are a few examples that have worked, and I think we can definitely build on them. I think that's fertile. I think she was next.
Hi. There is quite a bit of loss in energy in the existing buildings, and in fact, converting it to green seems to be extremely expensive. I was looking into it. And question is there going to be any policy mandating some kind of a green certification for new buildings, and also some help to convert the existing buildings into a better, green certifiable system?
Well, I think there are efforts brewing on all of those fronts, and I know that I'm not deeply familiar with it, but the energy efficiency and renewable energy part of the Department of Energy has a buildings program that's in making those kinds of investments. I think it's largely been voluntary, and I think that probably makes a lot of sense at the stage that we're at right now. One of the really interesting big questions to me embedded in what you said is we don't really have a very good understanding of, in real-world projects, what has been the cost of making the change and then what's been the benefit. And to the extent that we can build our knowledge base specifically in an area like that, but also I think more broadly across energy and different policies and technology solutions, I think we can get smarter and smarter about what really actually has the biggest impact for the smallest cost. So I think there's a lot of work, again, very productive work that can be done in that area.
Wind and solar as supplements are not really heavily dependent on storage. But as they make inroads into the primary generation systems, storage has become an increasingly important factor. And I wonder, when you figure this crossover point is going to be arrived at, and when are there plans afoot? Is investment occurring at the proper rate to integrate storage into the process?
Yeah, great question, because we do want to have the problem that there's enough of those intermittent resources that we have to deal with them. I just see the barest beginnings of capital flowing to that problem. Simple example that I heard through a company probably a year ago now was New Jersey now has enough photovoltaics that they're starting to have power quality issues in the distribution network. That creates an opportunity for storage. Storage in the grid is this thing that once it becomes cheap enough, the number of places that you really need to be using it are immense. I mean, it's many, many, many tens of billions of dollars. The problem is finding the first $100 million because storage is so expensive, and the problem has to be pretty severe before you can get started on that cost curve. So I'm just feeling like we're at the very, very beginning of it. There, I don't think we have technology solutions and a technology roadmap yet that get you to comfortable cost levels. So there's quite a lot of work to be done on both sides there.
Yeah, very good answer. And we have time for one more question because we're going to finish at 1 o'clock sharp.
He said it better be good, so since it's the last one. So I'm working on fast, capital-efficient clean tech in the energy space, which to a lot of people in clean tech is like a crazy oxymoron that doesn't exist. And I'm just wondering what your thoughts are on fast deployment of capital-efficient clean tech that can go from prototype to revenue in like 12 months. Does that exist? Is it relevant? Is it going to make a difference? Or is it just sort of some fun stuff that VCs might play with, but it doesn't really matter?
You are thinking exactly what I think most of the clean tech VCs are thinking. Because we didn't talk much about that, but I think clean tech venture capital is in a period of saying, we've been investing for a while, where are the big returns? Are we going to double down and keep doing this? Or should we be looking for things that look more like the IT model in this new market? I'm very convinced that there are those opportunities, and I'm really convinced that entrepreneurs and investors are going to find those opportunities. And I'm very happy about that, because unless we have those kinds of great returns in clean tech venture capital. We will not have clean tech venture capital. That's really good. I don't think it fully I don't think it's the only tool in the toolkit, because we've got problems that are going to be very, very capital intensive and long term. But, you know, venture capital, this may be heretical, maybe not on this side of the bay, but venture capital actually is not the only thing that makes change happen. It's such an important piece in our economy, but it's not the only one.
Well, it was the small parts of your investment charts, right? It was on the far left.
Yes. Yeah, well, it was a portion of that one, right? Exactly.
Well, I think you'll agree with me. This was a phenomenal start to the semester, and please give me a warm.
Thank you.
Join me in a warm round. Thank you for coming. I hope we see you both on Friday and next Wednesday and throughout the semester. And see you soon. Thank you.
For them, it is, I think. Right.